Hello, I'm Susan Rice, and some of you may know a bit about my background as a banker and, in fact, involved in some other industries as well. But there's probably one thing that many people don't know, and that is that I started life as a scientist and then went into banking. This was over in America. Now, a lot of people often say that science and banking would make unlikely bedfellows, and they may be right, maybe not. But I've also heard that statement said when people talk about banking and ethics, that those two words, those two concepts don't actually go together. Well, I disagree. I think they not only do go together, they have to go together. And that's what I'd like to say something about just now. So, as someone who did start life as a scientist, I often talk about putting a different lens on banking than the one that we hear spoken about now, and particularly that we read about so often in the press and we hear in the media. And the different lens is that banking is, of course, delivered through products, through services, through advice, through financial instruments, but it's about something. Banking has a purpose, and I like to describe the purpose of banking really as a two-part approach. One is to enable economic activity across society, and the other is to help create wealth across society. And when I say across society, I'm talking about all elements of society, people and businesses of all sizes, of all levels of means and personal wealth. I mean right across society, and I think banking has an obligation there. I'll use a story now to try to explain what I'm talking about, and it comes from my time as a banker in the United States. I worked for a bank in Manhattan, in New York City, and for a number of years I ran a division which might be called project finance here, but basically it was called real estate finance, and we financed the construction of large developments, large buildings, large complexes, and so forth. And I took that business into a particular area that very few banks were even considering or would even dare consider at that time. So I'll tell you the story about what we did in the South Bronx, which is one of the boroughs of New York City. It is the poorest congressional district in the United States. It was when I worked there. I believe that it still is, rather sadly. And it was an area of huge immigration, of huge deprivation, both in terms of jobs, of culture, of investment, even from the city itself. So a very, very impoverished place. There were some efforts made, and this goes back a few years, efforts made to start rebuilding parts of the South Bronx. And so some banks said, well, we'll find developers and we'll see if we can build some buildings, fix up derelict buildings and so forth. And my own bank did that. We made a loan to a developer, and he set out on an abandoned site, basically, to build a small sort of shopping mall with a couple of offices. It turned out he was a rogue developer, and what I mean by that is he wound up in jail. He was not a good thing. And what he left behind was a half-built, half-excavated site, and the weeds started growing, and no one else would go in and do anything with it or for it. There was no money for it. And as I looked at that, and some of my colleagues, it became a sort of visual manifestation of the abandonment that this community had felt for about 70 years. Now, banking regulation, the rules were absolutely clear. This, for us, was a bad debt, and what we required to do was to take the loss, write it off, and walk away from it. That's what you had to do as a banker. There was no debate about that. But we stood there and looked at the situation and somehow felt we couldn't abandon this community, and started thinking about, were there other things that we could do, any other ways to approach it? Well, we did. In short, we set up a subsidiary of the bank, which became a development company. First time that had ever happened in the U.S. I don't know if it's happened since either, and I don't think it's ever happened here. But we became a developer as well as a financier. And we decided to do this, we realized that we'd be working well outside the rules, well outside banking regulation. So we also decided, well, let's be upfront with our regulators and let's tell everybody what we're intending to do. And we positioned it that if we couldn't do anything with this site, we couldn't lose any more money than simply writing off the debt we had. So we positioned it in that way, and everyone shrugged their shoulders, didn't think we'd take it anywhere, and we got on with it. What we accomplished in the end, however, was to build a much larger shopping center, community area, and office complex. We financed it in a very creative way. Outside the rules, well, it was certainly, we created some new rules, I would say it that way. But we created jobs and services, both during the time of construction and then ongoing jobs and services. We created a center for the people of that community. We put in a little supermarket. They never had one there. We put in a bank branch. They hadn't had one for over 70 years in that community. And we also put in a cinema. Now, this was back when the Disney film The Lion King came out, and I have to say that when the statistics were in the first year of that film, more people saw it in the cinema in the South Bronx that we had built than in any other cinema in the United States. Quite extraordinary when you think about it. So we created something quite powerful there. And what we did was to go about it by looking at the potential social benefits as well as economic benefits. We didn't write a big check. We didn't say this is charity or philanthropy. That isn't what we were doing. We were trying to do something commercial, and that was the exciting part about it, and the challenge of it as well. So the business case for the project was actually based on creating new jobs because we felt that that would then help the prosperity of people locally. It would help turn an urban desert into an area that people would come to. Office workers were willing to work there because we not only had office space, it was for the Department of Social Security and also the Department of Justice because they had a lot of criminal activity there and they felt they could handle some of it locally. But so people would come to these jobs, but the whole complex had a lot of small eateries, little restaurants, a few little shops. So people would go to work and they could have their lunch there and they could have their break there and so forth. It all worked. And what that meant is that the landlords and the managers and the owners of these smaller enterprises actually had business that was kind of guaranteed for them, and that then drew in other business as well. That meant that they prospered. That meant that those who were leasing space could pay their landlord. And ultimately, what came out of all of this is that the bank's debt was repaid. We actually refinanced our debt with the City of New York and with the governments actually who were using the very big buildings we were building, but we financed in a way really doing it by tranches that you wouldn't normally do. Again, we told everyone what we were doing and it worked. But I must say we had to hold our breath for a while as we were going. This project created a great deal of social good and lasting social good over the years, which I'm very proud of. But it was also done on a commercial basis, and that was the real challenge. We factored the future social benefits into our numbers. Again, this is an odd thing to do, but it's actually very effective. This was not philanthropy, but we created a business case which turned out to be commercial, which meant that at the end of the day, not only did we not lose money, we actually made a little bit on the whole transaction at the end of the day because it worked. But we made it commercial by factoring the value of future social benefits, future jobs being created, future flow of money in and around because of this complex. We factored those benefits into the business case, and that was something that we'd never seen done before, but boy, was it effective. One of the things that I've thought about a lot since that project and in all my banking experiences is why don't we spend more time trying to make a judgment about future social or societal benefits from some of the projects that we support, from some of the lending that we do, or projects we invest in. Why don't we take account of those benefits into the business case, which we create today? We tend to create business cases purely on numbers and very often on what's gone in the past. And I just think we need to try harder to look at the future, the legacy that we create with the work we do as bankers today. And if we were to think that way, we would actually keep ourselves on the right path and we'd be doing the right thing. One other thing that I have thought about extensively is the fact that when a business, a bank, or any other business does well, they express it and we judge them in terms of numbers, in terms of financials. But when something goes bad, goes wrong, as for us in banking, it's done right across the whole industry in some respects, we tend to blame behaviors. Very funny split. Numbers if it's good, behaviors if it's bad. And actually what we need to do is bring those together. So when we're making a business case again, not only look at those future benefits, but we need to think about how do we actually achieve them? Are we doing things the right way? Not just doing them, but doing them the right way. And I think if we look at those future social benefits, that will help us be mindful of behaviors today, which really is so important alongside the numbers.